All right, welcome everybody. So real quick, I'm gonna do the longer dated trade now. I don't have my brokers available to show you guys, but looking at Apple, if you want to join along with me, Apple's at 175. Gonna look around. I'm gonna look at that May 17th, and it's up slightly today, 0.27. The 160 delta is 0.14 pretty much. The 155 is only a 0.08 delta, so it's a much lower one. I'm gonna look at sell the 155, buy the 150 first. See what the premiums are at least. It may not be worth it. Yeah, it's pretty low, 20 something. I'll look at the next strike over and see if it's worth if it might hit that price or not. Just give me a second here. APL. I'll give you a little rundown of what I look for with the little bit of the computer I have. So I get to use good old Google or Yahoo Finance. It's the only thing I got. Can you guys see my screen right now? Okay.
Yep. Yeah.
It's doing the weird thing sometimes on Yahoo where it doesn't show the bars. It's like showing lines. Sometimes a refresh, I might have to restart it. Yeah, like what is this? It's like theoretically there, but it's not. Try to reopen it. First world problems, this is what I have to deal with because I can't use all my thinkorswims and all that. So I look at the 3 month chart. It's not being friendly to me. Okay. Might have to look on my phone. Oh, here we go. Okay, so 3 month chart. The last month or so has been consolidating between the low is 167, the highs around 178 or so. We're pretty much near the high of the last 3 months. 155 probably is okay based on that. The problem is the premium's only 0.26. It's not horrible. Just let it expire. Probably okay. I'll look a little bit further out. 6 month chart. October was at 167. 155 looks fine to me. So if you want to be safer about it, sell the 155, buy the 150, and you could probably get about 26 bucks. So that's 5% on your money if you just let it expire worthless in a little over a month. I'm going to look at the 160, 155. The 160 delta is 0.137. That you can make 0.46 to 0.48. Based on the chart, 165 might get challenged because of that October, because it was near the low again just a few days ago. It's definitely a riskier play there. 5% on my money. I'm going to go with the 155, 150. So you get 0.26 or so. Yeah, I'll be alert for now. Anyone thinking about the 160, 155? Get a little bit more return. But it's obviously closer to in the money. All right, at this point, I'll leave it open for questions. I'm just listening. I'm just sending the alert out while you guys talk. Open office hours. Ask questions.
Hey, Lance,
Yes.
I need to bounce for a work call here, so I'm going to jump in. I had a few housekeeping items first.
Okay.
I bought everything, as far as the lifetime and everything. Is this
Yeah.
office hours? These are specific to the options. Is that right? Is there office
I'm leaving it
hours
open.
for the?
You could ask whatever you want at this point. I'm not overthinking that.
Okay, all right. And are these at a set time, just so I can calendar?
For the longer date, oh, you mean the meeting or the trade?
Like your, no, your office hours. So is
It's
this like,
it's
it's just
whatever I'm
random
free.
whenever?
It's whatever I'm free, to be honest.
Okay,
I'll try to do
that's
some
fine.
at lunch, but I do chess club Tuesday, Thursday, so I can't do it then. Monday,
Okay,
Wednesday, Friday, if I'm not completely busy, I could do it during lunch sometimes.
got it. Okay.
Any other specific questions you have before we have to go? Steve?
One of the items, as I'm looking at the spreadsheet, I can see mainly on your options trades. So you've got your average of 3% a trade. Um, is there an overall account? Like when you look at most investments, right? I mean, it's like they report on the overall account return. Is that, how would we figure that out? Or is that something you've considered showing before? For example, if
I
you
don't
start
personally
at,
do that. I don't personally do that because I did the 5K challenge and I'm showing how much the actual dollar amounts will be there. Since a lot of members will do different account sizes, they have different number of contracts. It's not gonna always work out that way. Obviously, if you do the same number of contracts, you should get very close to these numbers. But if you're doing more contracts or, sometimes you might do two contracts on something, another one you do three, the returns are gonna be all different there. So that's why I haven't done that.
yeah, no, yeah, that makes sense. For everybody having different, account sizes. And I was just wondering if you've considered that on yours, like, hey, this portion is allocated at, 10,000 and just kind of with your
Yeah,
running rate.
I considered it, but then I kind of did the compromise of the 5K. And that's why I'm showing
Gotcha.
it with the 5K challenge. I
Okay.
already show so much with futures and then it's just so busy. I'm not gonna do the stocks too.
Yeah, yeah. Okay. You do provide a lot of services.
Yeah,
I can't
you
keep
could
track
say
of
I'm
all of
a
them, man.
little say I'm a little busy. Yeah. I mean,
Yeah.
I'm just finishing up the alert for the stocks. 3-month low
Yeah, yeah.
165 and consolidation around the 168. Okay. All right, still open for questions. The alert is now sent.
Yeah, hey Lance.
Yes,
In terms of like all the different strategies you use, which one do you think gets the biggest bang for the buck? Let's
safeguard
say,
trade. The safeguard trade.
the
It's
safeguard is the
about
biggest bang for the buck. Okay.
for me. Well, meaning risk too. I
The
mean,
best return for the buying power, I guess.
coverage triangle has been the best in the last year and a half. We're currently challenged on the current one, but I go higher deltas on those, so that's why it's usually a better like risk return. But better return, but it's definitely riskier. I'll say it that way.
Okay, so which one was that? The strangle or the
The covered strangle.
the covered strangle? Okay.
Yeah, not the regular strangle. I got stopped out on a few of the call sides for the covered strangle.
Okay.
I gotta write the alert price for Apple. So is that we're selling the 155 alert. This is low, a little lower than that. I'll do 163. Triangle is a high delta, so it's gonna bring in good returns if the market stays bullish or flat, like per the amount of days that you're in the trade. But if you're getting assigned on it, obviously it could get risky because you're owning a contract and then it could go down $5 a point. So it's the biggest risk return that I do. I personally only do one MES with it. So it uses about $3,000 buying power in cash. I'm not willing to do a much bigger size of my strategies with that. Does that make sense, Mike?
Yeah, it does. Okay, thanks.
If you're doing the cover triangle, you want to make sure you're okay with getting assigned because get assigned, like, yeah, it can drop quite a bit. Just be aware of that. Okay. Open questions as you have them. I'm trying to respond to people on Discord while you're talking. I'm not trying to be rude about it. It's like nonstop for everybody, but it's okay. Alan, do you have any questions?
So any kind of defensive positions we should take just in case this war does start?
You're looking to buying ES puts, or if you have a big account, ES. If you want to do a smaller hedge, you could buy MES puts. It's not coming up there. I can't show the option chain, but buying an ES put, if volatility still skyrockets up, could be worth quite a bit. But it's a debit, so you gotta be willing to possibly lose all of it or a good amount. Yes, there we go. ES is Eversource Energy or it's the futures. I'm gonna put the backslash. Yep, ES is down 1.7%. That's a big drop. And the VIX going up is even bigger. This is a daily chart. We're near the lower Bollinger Band. Pretty sure that's a Bollinger Band in these gray areas. Yeah. So we're really close to that bottom Bollinger Band on the daily. And this is the Yahoo version. So take it with a grain of salt. It might look different on yours. The bigger issue is the VIX is increasing a lot. 28% is a huge jump. That's the day. If you see the VIX in the 3 months, we've been in this pretty tight range for a while, between 15 to like 12, and then suddenly it's at 19. So if you're in futures, that's what's causing a pretty big P&L losses today.
Hey, Lance, are you just doing anything to, I know one person mentioned that they had sold out of their MES out of everything a couple days ago. I think you responded to that. You're just staying the course, is that right? You haven't.
Yeah, I'm just staying the course. I'm gonna stop out of stuff if it hits my stops based on my trading plan. But besides that, I did a strangle today because I was planning on it anyway. I'm very mechanical about stuff, so that's why I'm not gonna just get out of the ring.
Services.
What was that?
Hi, my name is Jared with Dirt Environmental. How are you doing this morning?
I'm good, thank you.
Do you have any questions? I'm gonna mute her, sorry. Alan typed in, what do you think about selling out of the money leaps? 15 a year out. Buying back, yeah. Sure, if you like Palantir long term. And if you're willing to get assigned to 15. Could be okay. Yeah, we're at 22. 15's really low. You have to look at the option chain and see, is it worth the premium you're taking in for that? Good strategies I've heard is selling about a year out, sell put, and go around 0.1 to 0.12 delta. Try to close that out around 30 or 40% profit. It backtests very well. All right, Sean, have a great weekend. Questions as you guys have them. Mary, do you have any questions?
Boy, I need like a options for dummies book.
Okay. What are some of the main questions for now I can help out with?
Well, I'll share something and you can let me know if it sounds good. My positions for a few of the trades that yours haven't closed did close. because I bought in a little later, so the prices are different.
Yeah,
So I don't think you closed the dash position.
I'm still currently in it.
You're in it.
Yeah,
So my price was $1 and then I bought it back at 77.
that's good. That means you profited on it.
Okay.
You sold at 1
Yeah,
and then you bought back at 0.77, right?
that's right.
So that means you made money. You sold it for $100 because options are 100 multiplier. So it's 1 times 100 is 100. You bought it back for 0.77, times that by 100. You bought it back for $77. That means you made $23 on the trade. Okay?
Cool. Once I figured out, I was the one that was like, I don't know how to close these. Once I
Yeah.
figured out how to close them, I just
Yeah.
put in the close to sell orders with the
Yeah.
prices. I like figured them out.
What,
And then like,
sorry, what
Yeah?
brokers were you using?
I'm using Robinhood because that's where all my money was. And it's actually kind of easy for me now that I
Good.
am getting it.
Yeah, is it just buy to open, sell to close, or is it sell to open, buy to close? Is that how it shows it?
Yeah, that's how it shows it. Yeah.
Yeah, and just do the whole position. So like you sell to open the whole spread, you buy to open the whole spread after. Robin is pretty user friendly. Like it's pretty straightforward what to do. Like in terms of
Yeah,
like what to click on and whatnot.
Yeah. So my Google also closed.
Okay.
I sold at 0.91 and then I bought back at 0.68.
That's a good trade. 91 minus 68. You made $23. You're only using about a little less than $500 in the trade. You made at least 4.6% on your money in just a few days.
I opened them one day and the next morning, like they were closed. So they closed in like 24 hours.
Yeah, that's good. That's not going to be very common, by the way, but it's good when it happens.
Okay.
Right?
Okay.
What you could consider, and what I usually look at is, could I make about 5% on my trade? So just for the easy numbers, every trade's $500. If you do 25 divided by 500, you make 5% on your money, right? So whatever you sell it at, subtract 25 from that. Let's say I sold for 0.7, it'll be $70. Subtract 25. If I could buy it back at 0.45, then I made $25, right?
Yeah. Okay. That's easy.
Yeah, so now a few times they will get challenged and they're gonna be negative. At that point, I'm gonna post it in closed trades channel, like when I get out. But ask questions as you have them when they're gonna get challenged, because some of them will get challenged.
What does that even mean? They'll get challenged.
Okay, good question. So let's look at NVIDIA. Did you happen to do NVIDIA? Okay.
I did.
Okay, Mary, is there one that you currently have open?
MasterCard and Costco.
Let's look at MasterCard. So MasterCard, we sold the 445, bought the 440. Oh, it's showing. That's weird. Here we go. All right, so we sold the 445, which is down here. What I mean when it's getting challenged, let's say MasterCard drops a lot and gets really close to this 445 price. At that point, the spread that you sold will be worth quite a bit more than what you started it at. So when that happens, you're going to be down a bit on your position. I don't know if she just left or is there extra people? There we go. Yeah, so if this keeps dropping, the spread is going to be worth more than what you sold it at. And at that point, you would be negative. Okay.
Okay.
What
That's why
was-
the alert's 450.
That's why the alert's 450. So all I'm saying is if it drops down to 450, it's getting very close to the 445. And then at that point, I don't want it to drop more because if it gets down to the bought put was at 440. If it goes below 440 and ends there at the expiration date, you lost your full amount, the $500 minus what you took in for the trade. And we don't want that to happen because that's a big loss, right? So yeah, that's why I put the alert price. If it touches the alert price, many times I just get out of the trade. If it might have a chance of recovering, I might still look at it and hold it.
What's the loss if you get out before then?
It's
There's
hard to
still a loss.
say exactly. What some members are doing is they close out at 3 times whatever they took in. So if you took in, say, $70, if the actual trade is at 2.1 or down 210, they would close it at that point. And then your net loss would be 210 minus the 70. You lose 140 in that case. That's a pretty standard 3x loss.
What's that mean down to 10?
The actual spread would be valued at 2.1. And the reason why that might happen is the stock is dropping close to where we did our strike prices. Main thing we want is whenever we're doing these, we want the stock to stay where it is, go up as much as it wants. Or if it goes down a little bit, you're still probably okay because I'm usually selling quite a bit below where the price is. Okay, good questions.
Thanks.
I tried to give that in the beginner mode. I hope that helped.
So
Yeah.
these market conditions right now where we like randomly have a stock feel like, oh, I'm gonna lose 10% in 2 days. It's about the worst situation for some of these.
Right.
Yeah,
Alright,
Lance,
so-
another question on
Yeah.
zero DTE. So a couple of times I've done like a PCS at around 1 p.m. when I see the market's kind of flat, and it seemed to work out okay with only 3 hours left. Is that something that would be standard, you think, if we always see it that way? That if we do that trade always, a daily thing, if the market's kind of flat, that it should stay that way? Or you think most conditions, most times it would rally
It-
or go down, say
It
the last
could.
hour?
It could not. It's hard to know that.
Yeah.
I've seen markets drop really hard right before close or shoot up right before close. This happened quite a bit last year.
Even when it's kind
That's
of flat
something,
during
that's
the day?
that's something you could definitely brainstorm more of, like, if something happens, if the market is flat with a certain time frame, then I'm gonna do so and so. And then just test it out and see how it's working for you.
Right. Okay.
I saw another question before. What does the volume profile mean? So these little bars you see here, I sometimes see different data, depends on your brokerage. I'm just using Yahoo Finance at this point. These bars represent approximately how many people are buying at a certain price. So if this bar over here is pretty big, a lot of people were buying MasterCard at 475. And then down here, less people were buying at 460. And they're looking at the range that I'm on, so in the 3-month range. Quite a few people were buying when it was around here. Few quick, I'm trying to go a little bit beginner mode here. If you see a lot of volume at a lower price, there's a decent amount of volume over here. It could go down there, possibly because maybe some institutions and whatnot were buying there, and then they want to try to re-enter at that price. But it could get pretty complicated, so I'm just going to keep that simple. Next options, Chris, any other questions you have? I only have a few minutes. I gotta go in 5 minutes. All right, leave it open for anyone else. All right, guess that's it. Stay with your trading plans. If you're new to it and you don't have a trading plan, pretty much follow what I'm doing first. So if you're doing the credit spreads only, set your alert price. If it touches alert price, get out. And then as you're a little bit more experienced, you could do different things. But one of the main things is have a written trading plan, follow it. I stopped out on gold today when gold went up 2.5%. And now, last I checked, it was even. So in the end, that was a pretty, hindsight's 2020, that was a pretty dumb decision I made. But the market could have went up 5% for all I knew. So, all right, with that, I guess we'll leave it. Have a good rest of the day, guys.
Okay, you too.
Thanks very much.
Thank you.
No problem. Have a good night.